I'm gonna go on.
All right, you guys, good to have you that are here. I know there's a good couple of you guys that are going to be joining us later. I did want to point out, I was going through a couple of my older charts and I pulled up a SPY chart from here. And I mean, if you look at this, I was wildly wrong in terms of bouncing from here. We ended up going further down. But that had a lot to do with the data that we were getting from the Fed, right? Because we had our Fed meeting, telling us that they are, that was actually the first time that we heard the Fed telling us in a very hawkish tone, or at least Powell saying that they're going to potentially cause pain in the economy, and they expect it at this point. So we actually reacted to that, and I didn't update this up till this point, but you can see I had expected us to bounce over here, if anything. Now here, this big red candle, pretty much now that you guys now see, it invalidated what I was saying, right? If we bounced here, of course, we could head here and retest that. But now that it is, I was thinking here we had close to 2, a hit and then a lower. So here's our hit and here's our lower. There's a good possibility right now. We are just going to retest each of these fib levels. I do see a good possibility for this 0.618 in due time now. Before the week started, I was saying we're going to go to 400 and test 400. We've already broken it at this point. Okay. So what else is going on? Just little visuals for you guys as well. You have this rising wedge. Rising wedge, when it breaks out, becomes bearish. You can see that's what's going on here. Addition, we have our Fibonacci 1 up to 1, right? 0 up to 1, that entire move. Right now, we have now relaxed, hit our golden pocket, right? You can imagine here's the part where you have the 0.236 and the 0.382. We've already, broken through that. We've already come down here. So that actually shows we're very likely going to end up testing down here, okay? Unless we break up right away. I was also looking at after hours. After hours, we went a little bit further down. So let's do that real quick, show you guys that. On the bottom over here, well, right now, simply because I am on the daily, there's no after hours to show. So if I go into something like 1 hour, something within the day, then on the bottom over here, you'll have regular trading hours, extended trading hours. That'll give us what's going on after hours. And if you see with the past few candles here, right, we closed off right here, bounced a little bit and went further down. So we've already made new lows with the after hour, okay? What have I been saying about this? We got to keep in mind, let's take a look at different time frames right now. So what we have on the very bottom here is our MACD. Let's pull these up here. MACD, let's also be aware, and today, be aware of the numbers that are showing up here, okay? Because the numbers that show up on these give us an indication of how low we are relative to the most recent prices. And notice right now, we're low, low. And this situation I'll talk about here, we are under 0, so it is a negative value. But you also want to, I'll pull this up in a moment, of how it's important to, if you double click on this, you can see that we're making, right? So what does this mean? It means we've had some positive, right? A hot streak for a little bit from here to here, but we've crossed back down into negativity again. Now, the last time we had negative movement wasn't too great. It wasn't that bad right here. But so this could cross back up. It could, but at this point, this is starting to show that it is heading more bearish on this 1 hour time frame, okay? What else? That's the bearish signal there on the MACD. However, there is some, and I want to point this out too. Do you guys see the divergence though of that? So if I were to focus on just the MACD right here, let me double click it. This makes it obvious here. We have this sloping up. Do you see that? On our price, that is relative to it, we've got all this headed down. So there's a divergence here. And I've been saying that, you know, it could still head further down, but when we do bounce back up, it could be pretty violent. It could be a pretty quick and a pretty strong rally back. And I do think that 400 right now is pretty much where the target I would put as the psychological resistance. This 395 is there, but it's not as strong as that 400. What else? Let's look at different time frames so we see everything, right? 1 hour isn't enough. I want to look at all of them. Let's look at our 2 hour. Oh, hold up. Let me give you the numbers from 1 hour for our, what's going on right here. And here too, let's go back to regular trading hours. It's important to see what's going on after hours, but these indicators, because the bigger marble jar exists with just regular hours where everybody's trading together, we'll base our movements off of this, okay? So on the 1 hour, now if you see with our, you know, our MACD looks a little bit different. It is starting to go up, right? Curl there. Let's look at this RSI. RSI is down here at the 25 line, so it's starting to get pretty far down there. And also our stochastics, you know, around 10, 7.75 and 10.65. So those are very far down over here. And there is a little bit of that, again, still divergence showing. Let me click this guy here if you see that. But this divergence, I'll say this little pop right here, this has already happened. So don't get caught, right? This already happened. We broke down now. So there could be more pain to come, but we'll take a look at where that is versus that is. There still could be another rally and another bigger divergence that shows. We'll look at our other indications right now. Let's go out onto, let's just go into it. The reason, especially I wanted to do today is let's take a look right here. I'm not even gonna go into the price right now. Look at what the monthly looks like, okay? What the monthly looks like. We've got this little, it's in bearish territory, okay, if you notice, right? And if you can imagine when I look back upon all this, we'll just, right, this really compresses everything. So we've always been bullish, bullish, bullish because it never really, you know, kept going up when you imagine, right? Yes, there's these, but it kept going up, broke those previous highs from these. And as well, if this crosses, yes, we'll head back up, but it's only showing a little bit, okay? The red impressions on the bottom, I want to point out. So notice where this started, down here, right? Big monthly because today is the 31st, so it just ended. Let's look at how bad these impressions look on the MACD, right? It's still pretty high up there, right? And so it's finally back and relaxed back down to values that you can imagine from before 2020, right? These are more normal values, but still considered values in terms of the top, right? So there's still potential room to come down, and that would still be, you know, mathematically average. You know, it'd still be, we were way too high in these values that we had up here. Double click, come on. Oh, wrong. There we go. Okay, so let's talk about this. This monthly candle. So our indicators are showing there's still bearishness to come. Our candle here, in terms of a strategy though, you got to keep in mind, we did actually create a 2 candle, right? So we had this, that was technically a 3, or this was a 2, right? A 2 down, because it broke this one, 2 down. Then we have the 1 that's in between, this green one. And then we have a 2 going up, okay? So in a monthly situation, this is actually a possible reversal, okay? Let's actually pull that up. Let's go into, let me close this. All right, so we'll pull that up. Strat Assistant, right? Reversal. You see that? 2, 1, 2. Did I say bearish or bullish? I just said reversal, right? It's a bullish reversal going back up because now we're breaking to the upside in terms of the values we respected, okay? But keep in mind, that's just what the strat is saying in terms of what these last few months did, I want to talk a little bit because there's one particular channel I like to listen to in terms of the YouTube. It's the Maverick of Wall Street, and he had a really good picture that was explaining exactly what happened in terms of this little rally that we recently had. Okay, so do you see on the smaller frame, the daily, it is showing that there's bearish continuation. But on the monthly, with today's close, there was showing that we could be headed further up by the end of next month. But I want to be clear with that. That's just the price strategy of the strat. We got to take in all these additional indicators to be certain, okay? Our push down, still bearish continuation. We keep getting these twos, keep going down. So smaller time frames, we're headed further down, very likely, and everybody's calling for us to retest these lower parts here, okay? Let's do that real quick. So what happened here? So let's talk a little bit about shorts and short covering. It's the way I would start off this would be, let's talk about if we were all, let's just say the 5, 6 of us right now, we're all down here in terms of what we purchased, okay? And we know that all of the 5 of us, right, we're sitting here as big money and we're taking this run up toward the top, okay? This is the buy side of things. When we get toward the top and we get toward areas where we want to potentially take our profits, we kind of start looking at each other going, do you have your finger on the sell button yet? Do you have the finger on the sell button yet? Because we all want more profits higher and higher up. But the first person to sell very likely will cause the price to go down because we're all big money sitting together, okay? And what ends up happening is the moment one person hits sell, the rest of us want to try and capitalize on our gains because it's possible we could push the price further down or create a panic because of how much liquidity that we're taking out of that stock. Now, on the other hand, remember I was talking to you guys about the short covering side of things, okay? So if I short something, meaning I borrow the shares here and I'm waiting for it to go down, it's the same idea. Shorts are looking at each other going, are you going to short here? Are you going to short here? Are you going to short here? Oh, shoot, somebody just shorted here. I might need to start thinking about getting out, all right? And so think of it in terms of each time, okay, I'm going to use these and we're going to point out area, and then we made a new low. Do you see that? Area, we made a new low, okay? Here we technically use the blue line just to say this would be an area or this would be the area. And when you notice new lows, and especially new lows, what do you notice in terms of what happens there? Do you see that? You get these violent rallies back up, which are no different than the sell-offs at the top. It's just the reverse, okay? So what happens here? So you had shorts that started to cover, okay? Remember what I taught you guys. With the shorts that cover, you also end up with a gamma squeeze because after a certain amount of time, if the price starts to actually stick around and stay in a certain range, the market maker now with the expirations of certain things coming up, with those monthlies coming up, right? Or weeklies ending, they now have to hedge their position. They have to make sure they have enough Rolexes to sell to the market in case they decide to exercise their options, exercise those rights to the Rolexes, right? And so the market starts to purchase too. Now, another thing that I learned from the Maverick, we were always talked about how there's investor imitation and how the algorithms work as well. If you take a quick look into, I'm gonna have to take off the strat and pull back up my moving averages. What you can understand too is the moment that we actually gathered here at the 100-day moving average, a lot of the algorithms said, hey, we need to buy because that's just what the strategy is. We need to buy when when we break that 100-day moving average, purchase, and that caused the last bit of a push up. So this entire thing was a bear market rally. I want to point out, right? You'll hear that a lot. A lot of people are saying, oh, that just means that You know, we actually already hit the bottom. This wasn't just a bear market rally, we're headed up further, but you'll notice how many resistances caused that rejection. Let's talk about that. Not only do we have, it's all there, this downtrend, right? You have this yellow downtrend where you have perfect bounce, 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 okay? What else happened here? We also had, if I took that off real quick, you also look at here. Look how perfectly that touched. The blue line you can notice in here, and I'll show you if I went under my settings, is my 200-day, okay? 200-day moving average. Do you see how perfectly that hit too, right? It's kind of nuts when you think about it. It just tapped it and then went straight down from there, okay? So we experienced rejection, and you can also imagine there is some significant volume in terms of people and previous resistance as well in terms of the last time we broke down here too. So there are so many factors that we're saying it's gonna at least bounce hard off of this, okay? So in terms of smaller timeframes on our SPY, I will point out there are a few of these indicators that are starting to get pretty far down there, okay? My stochastic is saying we need a little bit of relief, but we very likely could head further down, okay? RSI is still not quite down there, but keep in mind RSI doesn't give you just little reversals like the stochastic does, right? The stochastic here will give you those the smaller bounces within too. So to see that down here near, and look at my number on the stochastic on the left, that 3.75 and the 7.85, it's possible we'll see maybe one more day down, but it's very possible that, you know, the first of the month, or, you know, we'll see some buying, especially algorithms, you know, moving into September with August closed off. There might be some purchasing that'll cause a little bit of that bounce, okay? Let's go into and talk a little bit more about why I also think we're going to bounce a little bit. Has to do with how the VIX is currently looking. The VIX, remember in the previous, you know, the last few of our charting sessions, what I was mentioning to you guys was that we do have this downward trend. The moment we do break, it's very likely going to relax for a moment, right? You break, you relax for a moment, and then you shoot off again, okay? I don't think this is over just yet in terms of that, the VIX moving up. You know, yes, we bounced off of this, but is it any sort of real significant resistance of any sort? Not really any significant. Maybe this bounce right here, but you know, there's still very likely, and because of what's going on in China, what's going on in terms of still, there's all this talk about, you know, Ukraine still, and all this other stuff that could cause, you know, whenever the fear and the media decides that they want to spike the markets, I think that's going to very likely happen. But so far, we're showing actually a little bit of relaxation at this point. Let's zoom in just a little bit to take a better look. Let's go into the 30 minutes so we got some detail here. So there we go. Okay. If you also realize our markets, right? When you take a look at that, it can come back to retest, but here you just kind of have this ABC type of pattern and a bigger ABC retracement in terms of that. And that is also showing in our SPY. Right? What that ended up being here is you have A, B, C, and then there's this, actually it just went down to here, and then you have the little ABC, and it's still retracing in that manner. So right now we did break a little bit lower. I do see it coming down, but I would even say with the way that this has moved, there's possibility for us to come back and retest at least around here and around here, okay? There still is a little gap here that never got filled and a gap up here, but right now, would you guys say SPY's headed back up toward 420 and 430? That's rough, especially with the Fed really poised to raise interest rates and things like that. Now, on the 13th, not the 12th, the 13th, there's CPI data, right? That's consumer price index that's coming out. Now, keep in mind, if you were to think about what's going on in your grocery store in terms of the prices that you experience, are they still going up, and are they as bad as last month and the month before, or have they really relaxed? From my perspective, I'd say, you know, gas has been cheaper. The grocery bill hasn't been nearly as terrible. As there was a point where I was just like, how did this turn into an $80 grocery trip? I just needed a few things. That didn't happen. That hasn't happened in the last few months, or the last month or so. So CPI data, I would imagine very possibly could come down. However, it's still going to be a comparison to the expectations of the analysts. Okay, so keep that in mind. It's, you know, the last two numbers we had were what, 8.7 and then 8.5, and the markets had that crazy rally because the narrative was that, hey, inflation has peaked. So you see that inflation's coming back down. Now, in terms of the consumer side, I do feel like it kind of has to an extent, but it doesn't mean it couldn't keep going up if we do the wrong things with our monetary system. What are some of the wrong things that we're doing with our monetary system? That Inflation Reduction Act of, you know, pumping a bunch of money, the entire situation of, you know, I'm sorry, I love the fact that we are forgiving student loans to an extent, but that's also inflationary. It's pumping more money back into the market, right? It's giving people money. There also was a thing that said how the searches for stimulus checks has suddenly popped up, even there hasn't been any sort of promise of any of them coming up soon. So, you know, people, I do believe, are hurting. The consumer credit cards are at an all-time high in terms of households taking loans out in the form of credit cards, while because a lot of it had to do with the rental costs. Rental costs have gone up, you know, the housing market, et cetera, but also the housing market right now is talking about how that's relaxing and people are starting to, you know, there's supply coming back to the markets and it's starting to, the demand is starting to wean off. There was also another statistic I saw of how 70% of home buyers in the last year are a little bit regretful or have buyer's remorse because they're now seeing what the market's starting to do. So there's a lot of situations that in the big picture, we haven't fixed the inflationary problem. As of right now, though, for next month, I wouldn't be surprised if after CPI data that we end up rallying to an extent, okay? And right now with what all of this, you know, this big giant sell-off, right? So we have a big giant sell-off, all had to do with what the Fed was saying of, hey, we we want to maintain price stability, right? That's the first thing. Price stability makes sure that we have an economy to deal with. Without price stability, if inflation keeps going up, you know, things can get out of control. So they're like, we need to nip it in the bud by, at this point, raising rates to a proper number. You know, before they're saying we're already at neutral, now they're saying let's raise it to higher values, and potentially faster. So, you know, at the end of the day, this whole situation very likely, you gotta keep in mind the market's gonna react to it. Okay, it's gonna price in what they expect for the future. So I'm expecting right now we are potentially headed to lower values because, you know, people are still pricing in what they expect up toward the 13th. Okay. But if CPI data on the 13th suddenly comes out, right, we come down lower, CPI data comes out good, we could rally again. And then when we have the Fed meeting, I want to say the Fed meeting was the 20th. I need to double check on that. We rally, doesn't matter to where. And then the Fed meeting comes and they raise interest rates even higher or even more. that could cause that big sell-off too. So just keep in mind, it's an ever-changing landscape that we got to keep in, keep on our watch. Okay. VIX I went over. Let's talk about Dixie, DXY. The dollar is kind of just sitting there. It didn't break up higher. It's just sitting right below that 109 value area. But I want to point out it is starting to, or at least at this point, higher lows here. Okay. Yes, this was one low, but this break and shot up over here, that this could just turn into, right, a flag headed up. And this has characteristics of that we very potentially could go up. All right. That's not good, especially also what's also going on right now. There's Europe has an energy crisis. They're not able to source the right amount of energy for the country. And as a result, it's causing a lot of problems too. And the dollar can get stronger because the other economies are struggling there. Okay, so keep that on your watch. This so far, I mean, in terms of the consumer standpoint, this has been good in terms of U.S. oil, or the crude oil coming down. This is actually the 30-minute chart. Let's look at it on the bigger picture. The whole spike that we had, right, when oil prices went nuts, you can see was when it blew off the top first here and then up there, okay? We had this, a dead cat bounce that came back down. Now we're back toward these levels again, okay? But we're not down below it yet either. We have just bounced again, actually respecting this 88-ish, 85, 88-ish range, okay? So could this head further up? It is very possible. It all comes down to what happens in the political sense, I would say, right? Oil is often something that we're gonna fight over. So keep an eye on this, because if this does rocket up, it's gonna cause additional pain, especially upon the consumer again. All right, let's go into the major ones to Nvidia. Wonder what I had charted here before. Yeah, played out somewhat to what I had. Let's take a look here. 1, 2, 3, 4, 5. Headed further down, did not bounce at where my fib level was drawn. Let's go closer here. Let's make this a little easier to look. We don't need the 1, 2, 3, 4, 5. We see that, we see the ABC. Let's get rid of those so we can see better what's going on in here. So got a bounce here. Green came back down. Okay. Okay, so what we did here was we measured this. If we're saying if this were headed down, this is an A, and we can come back. And what I did was I'd measured that and laid it down upon this to see where it would go for the one full measured movement. And actually right now it's at 1.618, which, so this could turn into our 1, 2, 3, right, 4, 5 if we're headed down. So this could have been the beginning, because here, let's see, kind of interesting how we have the green, but we're headed further down. So this is actually our impulse down, because it was a sell-off. Even though the price of the green candle means of that day it ended up higher where it opened, it was a sell-off here actually. So you see that? So impulse down and then down. So 1, 2, 3, yep. So, and you have a 1, 2, 3, 4, 5 in here too. We could head further down to either of these values, and that could still be just wave 3. So we could have the 4, 5, or we could continue a bit. We'll have to keep and monitor that. Let's take a look at what our indicators tell us though. Our move down for a lot of things put my stochastic pretty far down, okay? And so I just want to point out on the daily, at least here, my stochastic down here, down here, down here. okay? Let's use this. You have a bit of a bounce, right? But keep in mind, when I say bounce, people think, you know, I don't know if you're thinking of it like a super inflated basketball where it just goes and goes, boom, straight up. No, that's not what a bounce is. Like, you got to keep in mind the energy coming down. Sometimes it can be very small. They don't have to be huge. And you also need to keep in mind they sometimes will take a little bit of time, but also if you hold on to it too long, the reversal can come in too. Now, in option situations, you don't want to be holding on very long anyway. You're looking for that quick bounce to take place so you can move on and move forward. Now, let's take off all these drawings. Let's look at some of our indicators. Let's go from 15 minutes right now, just so I can give you guys some experience with spotting some of these potential divergences, okay? Let's get that off. We don't even need VPVR right now. Okay. So Nvidia has been going down, right? So you have all this downward motion. If we go into our, there's a little bit of divergence happening here. Do you see that on the 15-minute? All of our RSI indications right here, every time it keeps bouncing on the up, right? Here's the bottom of it. There's a little bit of a reject, a bit of a reject, bit of a reject, right? Keep in mind, it doesn't have to be huge. You see how small that one? This one took a little bit more. This one had a bit of a bounce just that day. Right, it bounced again. Do you guys start to see how my RSI and stochastic really work together, right? When both of them start to show, you can have these movements. And keep in mind, right now, this is only the 15 minutes, so this is moving quite quick. This was only the course of 1, 2, 3 days here, all right? So this is showing that there is some interest building in this, in purchasing down here. If you might notice, you're starting to get more green here. When you say, you're very red all along here, and then the green starts to peak in as price gets lower, right? The bulls are more interested. So let's go bigger. Let's go into, let's just peek at 30-minute. And let's also make my MACD easier to see. MACD starting to have some divergence. Do you see that? It is going up higher. RSI curling here as well. Let's double check what this one says. Oops, I have to click in the middle. Ooh, I kind of like the way that looks. Wouldn't you say? Wouldn't you say that looks pretty good, right? Multiple divergences and continuing to show that and respect that on the 30-minute. Okay. And here's the thing. It's good that didn't get caught in one of these earlier ones and stayed in it the whole time. Yeah, you had chances in each of these to play a quick pop. Keep that in mind. Does that make sense? Right? There is also the people that say, well, yeah, and then it reverts and I'll get in an average down kind of thing. No, just get in, get out. Get those quick returns and get out, especially in this market right now. If you don't have confidence that it, on the long term of things, do those short situations if you notice these indicators on multiple time frames. So Nvidia here, I definitely say 15 is showing, 30-minute is showing. Let's go into the hour. Do we see it happening in the hour? Has it leaked into the hour just yet? Yes, here you see that curling, right? Prices all lower here. RSI, yes, respecting that. Probability is getting better. Our MACD, oh, yes, for just right here. I would have loved to see this do this, and then you would have double, right? Or even more. But, that's not pretty exactly, but, we'll take that with the other indicators all showing are good signs. The third one is showing a small bit here near the end, which is also a good idea because here it's showing that, these values over here really are starting to curl, okay? Let's go bigger. 2 hour. Okay, do you see how the MACD smoothed out? The divergence has disappeared for our 2 hour. What is the RSI showing? RSI, yes. Is my stochastic showing? A little bit, yes. Okay. So here, what would I look in terms of a possible bounce? You could definitely say you're going to bounce toward this range up here. You see that big candle on the 2 hour, especially as you can imagine the smaller time frames are kind of building those divergences, and when they start to appear, they'll start to appear on the bigger time frames if they continue to build. Okay. Real quick on the daily, the only thing is, right, daily RSI is the one over here where it's just like it's down below 50. There's nothing about how it necessarily will bounce, but here's one thing I will point out about that is the last times that we had a bounce was right at this value too. Okay, so those are considerations to think about in the situation of, oh, well, there could also be some good interest here. Would it make sense that you're going to get interest in this range as well? Let's go in and think about just prices. Yeah, the last two significant areas, right? Let's do this. This yellow line has been broken. You can say broke down, retest, and broke down. You also have this where it broke down, okay? So those are already indications that that came down. You know, it was headed down toward further values. But on the other hand, where are we looking for bounces? You got this guy and you got this guy that are gonna have, that we've already rejected from significantly before. So you can imagine those would be support. This being broken though, right? That's rough. You see that, this 1.236. You had some buyers here, that one broke already too. So, you know, it got very, very bearish very quick, but it also, you know, think about it. People, couple months ago, thinking about Nvidia back higher up, isn't 150 much more attractive to them now? Yes, but you also want to think about, you know, where do they really want to step in, because they understand that interest rates do change the way that we perceive asset prices, okay? So Nvidia, especially because it's at this right here. Oh, let's go real quick. Let's go into our 30-minute and let's observe the move down. Let's just chart this on Zoom. There we go. So keep in mind, I want to call this the impulse down because we gapped down. Even though it's a green candle, it was a lower price and it showed that we're starting to sell off, right? Sell off, bounce back. It never broke back below previous values of 1, right? And so here's our second move, okay? 1, 2, 3, 4 would that be if we, yeah, we didn't touch that. And then this could be a long 5. Okay, so we could even see an ABC here before another leg down. Let's talk a little bit about AMD. What do I have for AMD? Let's see. Okay, we're at the bottom of this channel right here. I don't know if I necessarily think we're gonna bounce that hard anymore, right? With the way that we're poised. Yes, it could still come back. I want to say at least back up toward this channel here. Big picture though, right? What was it? I was saying that this was taking that head and shoulders. Yeah, this was my head and shoulders prediction. There we go. I was looking a little close. Here's shoulder, here's the head, right? And then here's that second shoulder. But keep in mind, we're just, okay, so what is this orange line? This orange line could just be the retest. But we want to be very, very, we are actually right now, if you take a look at this, you should be very concerned about this, of how quickly we came down to retest it, okay? If it breaks that and we come back into this channel, we're just going to come back and respect those previous values. And we very likely could come to retest the lows or the uptrend here. You know, technically on the very, very big picture for this, it's still in its uptrend. Okay. So when I went to the very, very bottom of this, we're still above it. All right. But we are coming back down, and with the character of the movement, it's hard to say if we're necessarily going to head back up so quickly. Let me clear that. The picture that the Wyckoff picture that I was giving you guys, I want to keep in mind there was two predictions for it. You have the quick, quick one where it would head up, and then you have the potential scare off, right? So you scared off group one, you scare off group two, and you scare off the third group before it heads up. In terms of the company, in terms of their earnings, in terms of what they produce, they'll be around. There's so much money flowing into these that they'll be around in the long run, and we're not gonna, you know, stop using these chips. The thing that I still do want to keep pointing out for everything, though, is the price to earnings ratios are still quite high for things. And the only real argument you can give me for why they're this way is always saying that it's a new paradigm shift. Okay. Those words in particular, I feel always you're always going to have to eat those words sooner or later. Historically, with monetary policy and how things are valued in the market, these numbers never stick around because it doesn't make sense. You know, with some of the newer classes, I was using a lemonade stand as an example. You know, if I made, let's look at it this way. So if I made $1,000 in profits per year, okay, per year, would you pay $36,000? 36 times it, would you pay $36,000 for my company? If I made it would take you how many years? It would take you 36 years to get that money back. Is that worthwhile? No, that's a terrible investment. You see that? So what were traditionally good numbers they would even say on the high end was around like 10 to 14. And that was already in terms of like, you know, those are good numbers to think about. And that would be saying for my $1,000 that I make per year, you're willing to pay 10K to 14K, which is still, you know, quite a bit. And that's also me assuming that I'm going to make that grow fast, you know, continue to grow. So real quick, let's do this too. Let's pull up Tesla, guys. Tesla is always impossible to predict because you don't know where the shorts are and when they're going to start to cover, especially because premiums are so expensive. And, you know, it is, you know, it's a pricey company. They do a great, but look at this price to earnings ratio on the right, 100. So what, I make $1,000 a year and you're going to pay 100K for my company? That's what you're valuing it at? Okay. That doesn't make sense. So Tesla is overvalued when it comes down to looking at the fundamental price and what people are paying for it. But I've always said the reason people are willing to invest in Tesla is because there is this mentality or this belief that Elon is going to do something to save humanity. With the things that he's producing often are, you know, like I do believe him releasing a lot of the patents for EVs does allow us to move faster in those directions. But at the end of the day, does it warrant you paying 100 times PE? Not necessarily. So in terms of like, you know, investment, this is truly and purely just that, you know, in terms of money, it's that it's called the greater fool theory, that you need to find somebody willing to pay more than you are. that's the only way you're going to make money in this situation. Okay. Now, let's take a peek over here. Their earnings did cause a little bit of a pop in terms of a movement. There is this little possibility of like, you could argue there was the pop here, 1 really ugly retracement, triangular retracement, 2, 3, 4, potentially 5. Okay. But what I was saying in my charting from before was also, what did I say about the split? Split brings in, you know, and brings in additional buyers because people can now afford it, right? And so the split did happen, and there was buying up leading up to it, and then it just dumped right after the split. So I was saying that's very likely to happen. You're going to have, you know, this announcement of, hey, it will be cheaper, there will be money put into it, but as the people buy because it's cheaper, they get dumped on. All right, so be careful of split situations right now. And yes, it makes it, in terms of more demand on the retail side, because it makes it more affordable for a lot of us. But at the end of the day, you usually want to wait for it to settle a little bit before you might, you know, look into getting in. There are some really interesting resistances here. So you have this trading range, this accumulation, and then you had, you know, shorts starting to cover, and it popped off just as well. Okay, just like this was shorts. Okay, shorts, right? Remember, I was telling you, when they buy back in, it can cause them to look at each other. Then after they all try to get out, then the algorithm, or not the algorithm, the market maker has to cover and make sure that they hedge their portfolio. They make sure they have enough Tesla to sell everybody. And then the algorithms jump in onto it afterwards. And then public, and here's the thing, public usually tries to get in here or up here. So you got to keep that in mind. Public very likely started to get in over here. And right now it's just headed down. Here's a cool little exercise. I like to zoom in on this for Tesla. Let's look at this retracement that we're having. I think it looks very perfect in terms of understanding, looking for those patterns. I know this is on the 1 hour, and that's why we're able to see it a little bit more. And here's what we have, okay? Remember how I said if we have an A, B, C correction, you can have A, B, C in there. A, B, C in there. Then on the backwards up, you can also have A, B, C coming up. A, B, C coming up. And then what do you have coming back down? An A, B, C coming back down. Is that pretty clear, guys? Do you see that? Okay. So this is a flat retracement. In a flat retracement, you got to keep in mind, these are the most likely to create additional combos moving forward. So there's a good chance that we're actually potentially just going to continue. And actually, this could happen as we just go 1, 2, 3, and then actually play out some sort of crazy flag over here. And it could start to look more like Wyckoff. It's going to ultimately be the decision of whether the bears step in force, or if the bulls step in force, of what direction this will end up going in. Because right now, keep in mind, valuations are still extremely high. If those interest rates are going up, it's going to cause a lot of these overvalued stocks, people to start to want to pull their money out of them, okay? Couple things to mention with Tesla. There is these very tempting gaps down below too. So keep in mind, it wouldn't be surprising to see if you would, this could be our climax, right? You have your retest of the top. You do have this that quickly shows weaknesses, right? Popping down, going down so quickly, and also weakness breaking below. So if we're not able to break back up above this 280 range, I would not be surprised to see us either chop up over here a little bit and then head down, fill this gap before we determine what to do. So down toward 250, that's still very likely. That's still very possible. Okay. If there really is going to be pain upon the economy, like Powell's saying, I would not be surprised to see that happen. Keep in mind, there's that, and then there's this gap too. Okay, let me pull up should have written down what exactly you guys wanted me to go up through. Let's see. AMD, oh, Snapchat. Okay, we'll do Snap. Oh, let's do Apple first. That's what I meant to do. What did I have on here before? Last point of supply. Let's see, bigger picture. Oh, that's ugly though, the way we moved down. I went to the top of the channel, rejected. Spring, well, originally I would have said this very potentially could have been our spring to go back up. But now that we've rejected that fully, if you see that, we know that we're not showing that strength to head further up. This is actually very, the way Apple reacted to the top here is not a good sign, guys. We're headed probably down toward these ranges, this 150 range for Apple. A lot of our values in here, stochastic shows there could be, and there should be some relief pretty soon, but it's still biased toward the downside, I would definitely say. Let's see closer. They do have an event coming up. That is true. That is one thing to keep in mind. So we did just fill this one gap. You'll see this gap right here just got filled. We showed a little bounce off of the bottom of it, and then now we're just back toward, and now we're back into this. So let's see. I see a bit of relief, but I still think we're headed further down. I think we're headed further down, at least toward this range right here, this 150 range, because that's where the majority of this other supply and where we bounced and have, you know, significant resistance at too. You see that right there. Yeah. You know, I was saying when we're pretty high up here that if you notice the stochastic, right, the divergence, I had that drawn in here showing that we're potentially headed further down. I think Kimo also had a little bit of a charting thing earlier in the weekend that was pointing that out too. MACD kind of starting to curl, RSI showing a little bit of divergence. So yeah, I definitely do feel if we don't bounce here, I say we're bouncing down at this range, this 156. Let's do Snap. Snapchat reported they were laying off more of their workforce. But then if you kind of notice, they rallied. Why would they do that? Well, laying off their workforce means they're going to pay less money, right? And so at the end of the day, their company is doing better, even though it's bad news for them. It's bad in terms of the backlash from the public. People aren't going to like the fact that but in terms of satisfying their investors and the stock itself, yeah, it's actually going to potentially cause a rally. I also think we saw a little bit of some calls being taken for Snapchat in the, in the Discord. And I wouldn't be surprised. So here's, think of it this way. Very bad news is given. Okay, so do that. As you start to observe the market, bad news is given. It's a natural reaction. It's going to gap down, right? However, what usually happens from there, you very likely are going to have situations, and so this was where the bad news came for them laying people off. This was just earnings being bad on the left here. But what usually happens is it sells off, and then you can always do this, is find the peak of that move. If you're quick enough, you can try to catch it into the golden pocket, but otherwise look for it to respect your fib levels to an extent. Do you see that? This one went pretty close to 0.5, but rejected and came back down. Okay, so now we're sitting at that 0.236. Snapchat with the news, right? Let's go in here. take a look at that. Oh, 5 is too close. Let's do 15. All right, actually popped up with all that news. First 15 minutes sold off, went a little bit higher. So here, let's do that. You gotta keep in mind, they still gotta prove themselves a little bit. So here's 2 ways, let's do this. Let's do this one. See it's sitting at the 0.5. And also if I flip this around just to give the other fib of to this point, you'll actually see just the 1.272, or if I add the 1.236, right? Probably would be these values. So movement, it bounced a bit, died down, buyers came back in a little. Let's take a look at their financials. Oh, you still lose money? How do you still lose money? Come on, guys. Net income, negative 422 mil. Profit margin, negative 38%. So let's talk a little bit about this. They're doing fine here, not fine. They finally got a profit margin of 1% at one point. Guys, Snapchat, okay, revenue has gone up year to year. That's good. But how is your profit margin still such complete shit? Okay, theory behind what's going on, because this is actually happening for a lot of companies. A lot of companies are having trouble with their profit margins, okay? I want you to be aware of that. Look into whether or not they're maintaining their profit margin. If not, there could be some trouble ahead for those companies. Simply because what happened, okay? Number one, it's good that they're doing something to take care of this because of the layoffs, because a big part of what they're what they're liable for, what they have to pay out is for human capital, for people to work. So their workforce is going to be a big part of why their profit margin goes lower, simply because over the course of the last 2 years, we had a bunch of layoffs, and then we had a bunch of people, we had a demand for the labor market suddenly that actually created a very big price, shot up the prices in terms of acquiring good talent. So especially in the tech industry, you would hear a lot of people jumping ship because they kept getting offered, ridiculous, pretty awesome salary. Now that's cutting into and causing the profit margins of a lot of these tech companies to get, to be cut, okay? So if they aren't able to maintain those revenues, this actually could be a sign that if they don't take care of the extra bloat that they now have, then they're very likely going to potentially end up going kaput if they can't fix those things, okay? Now, would Snapchat necessarily go kaput? They are quite a big company at this point. Market capitalization, 18 billion. So I wouldn't necessarily say go kaput, but in terms of their stock price and in terms of their, how low it is right now, it's not surprising to see where they're at. And right now, this very potentially, let's talk about this. What did I just talk about when we started today? Was when we start to make lower and new lower prices, right? What usually ends up happening with these stocks and what ends up happening with the price movement is you have these shorts looking at each other going, are you going to get out? If you are, I want to get out, and maximize my profits. So as we go lower here, yeah, I don't think the newer generation uses Snapchat as much anymore. A lot of kids are moving to TikTok. It's unfortunate because that's just the way that China's mining all of our data. But, we went lower, right? Look at this. Let me point that out. We went lower, right? We went lower and even lower. So right now there's very possibly shorts that are just looking to, right? This was small, right? Etc. So Shorts could still be getting out and it could cause a little bit of a rally, but in terms of the financials and the overall company itself, I would avoid it. Price action wise, there are gaps here that you could look for it to fill, but understand they very likely at this point are more so just going to act as resistances. More so unlikely we're going to break up above into them, especially with this. Yeah. They only bring in $1 billion a year. Okay. What else? QQQ. What are we looking at here? Does anybody else have anything else they want me to look at, or questions, or anything in particular you want me to go through? Let me go through, see what else I might have missed. Oh, let's do DOCU and Ethereum. Let's do that too. Oh, well, let's make a little adjustment to this. I don't know if we'll necessarily make that wave 5 if we still continue to break down. We're very close to breaking down below the 0.618. Yes, with the bounce, like I think I should be a little more clear with my, when I say I expect a bounce, is I expect that the price is going to revert. So don't expect it to go straight down, right? But the bounces, like you can imagine, even these little moments back here could be bounces, and they ultimately are. But if you hold on for too long, you're not necessarily going to be profitable anymore. That's how these markets work. So, be quick, be happy with your, I get it. And I think it's kind of rough because when you are constantly looking at the main leaders of the Discord, they could be making thousands, but at this point, your approach should just be making you maybe $70, $80 at this point with how quickly you get in, quick get out. But getting used to that movement and getting used to that quickness and being happy with that is a part of training your mind and your psychology to be ready for those quick bounces and those movements and to stay profitable, okay? And I don't know about you guys, if you guys have been trading much, you can always update me individually. But if you've had a trade that was green and quickly reverted red because that bounce didn't, that bounce is over of sorts as well, okay? So again, there's a lot of these right now, especially on my daily, that is showing that it's very, very overextended on the downside, okay? And I've been going into like regular, just basic motions of doing this. I really, really wanted to today is make sure that I show you guys what that monthly candle looks like overall, because we had a close of the monthly today, okay? Now, reminder, just like I showed you with SPY at the beginning, QQQ, IWM, they all have this look, but we want to be very careful with it is because it's still not showing that we're necessarily headed back up, okay? Yes, this is a reversal strat, but you also want to understand that the way these two wicks are showing is that we're now pretty comfortable with these prices down here, which do coincide a bit with us further on the left too, right? And if this still was a, you have your accumulation, your reaccumulation, and your accumulation was further down, your distribution, we want to be very aware of the big picture fibs, okay? So let's take a look at that. If I pull up the monthly, actually, let's do this on the weekly to see this, right? Oh, also, just to point out too, monthly is kind of sort of crossing, okay? But you do also want to understand it's very red, and this isn't really a divergence because this is still higher right here. So there's not exactly a turnaround just yet on the upside. This candle that we also have is also very likely just showing next month we're very, very possibly going to entertain these values down here below this red candle, because today, what also happened today? It's not like we had our candle and then throughout the month we went a bit lower and then came back higher, guys. What happened today? We closed right at the very bottom. Hold on. All right. Okay, so what I wanted to point out here was simply just that we closed at the bottom of that candle for the month, and very generally what should tell you is we're more likely going to entertain some values below that. Whether or not we go to the very bottom of this previous green candle or this red candle, we'll see. But this is just saying probability wise, we're very likely going to entertain lower values because we closed right at the very bottom of that candle. And if you imagine too, after hours, we did go a little bit lower too. So that's just something to keep in mind. So again, daily, you do have some, again, stochastics pretty far down. I can expect a small bounce, especially because as well, you do have previous support here. So if you waited till to hit down here, you can expect there's going to be a bit of a little bounce there, very likely down here as well, and obviously previous lows. But all this reaction we're headed down has a lot to do with just how we reacted to our Fed meeting, okay? Oh, there we go. Let's go weekly. And what we do here is we're gonna go from pandemic low, Fibonacci, that retracement, to, that's really ugly, hold on. I want to trash it. No. Okay, I'll put it back on after. So bottom to the top, right? And you can see a couple of very drastic moves. Number one, this red candle stopped right on it right there. All right, we peaked up above this, respected that. We hit our golden pocket, went up higher, came down to our 0.5, tried to go back up, but we're still back down into this range here. So if we do break down below this and this, of course, we're headed back toward this value down here, okay? Keep an eye out for those things. Let's do, I want to make sure we got these in here too. Oh, no, let's do what you guys are, DOCU. And then we'll do Ethereum, and then I'm going to do MULN for chemo as well. I was noticing MULN, we were talking about, has some things to look at, and definitely will very potentially have a good little pop there. Okay. Daily divergence, you see that? All right, that's this entire move down. Let's give it a better look at this right here. Okay. So going lower here, we had this one obviously getting higher. Let's look at this one in here. Okay, this is starting to divert pretty well too. Stochastic, not as much, but this is an indicator that I'm very, fairly confident, at least on the daily, we're going to have this little pop upward from here. What else gives you that confidence? Okay, this is a hard part, of course, what earnings turns out to be, okay? Their revenue is good, but they just ended up with a bad earnings there. I want to say it should pop. If I were to ignore the earnings, this should pop. The earnings is the one that kind of makes it more of a coin flip, I would say. Did they fix their profit margin is a good question. All right. Or are they stuck in a situation similar to something like Snapchat where they do have to let more people potentially go? All right. If earnings weren't right there, I would definitely go with a bullish pop that, you know, probably like the, you know, right here, the 60 calls for something of like October, maybe November. But with the earnings right here and also how close we are, IV very likely is a bit higher already. Here's the thing. Potential theory is that this could have been our earnings run down because of this. And so if our earnings comes out to be actually just a little bit better than what we, you know, expected, even in a poor sense, right? Let's see what they expect here. 43 cents. Okay, a little bit more. 602, so more than before, right? If you feel that, you know, the company itself should have made more money since last time, maybe they're pricing in the fact that it's not as good and right now, right? Combined with the Fed talk as well. And so earnings comes out just a little bit better than we expect and we get a pop. I would actually say, you know, there is times earnings does end up becoming a bit of noise overall, but you know, that's what I would say. The concern here is earnings and technicals, catalyst, and also because it's already dropped so much, there is a possibility we may head back up. But here's the danger that I would give you is if earnings turns out bad, we gap down and then we get the relief might not come back above those. That's where the danger would be with that earnings, okay? But looking at all these other indicators, it's showing divergence. Let's look at what weekly too. It's showing divergence weekly too. So I would definitely put this onto that watch. Let me pull up I'll pull up my Webull. We'll take a look at the contracts. We'll see if we have good open interest somewhere. On the 1 hour, I mean, we're heading higher here. So very interesting, very interesting. I definitely we'll pull up Docusign in a moment. Let's do Ethereum and then MULN, and then I'm going to pull up Webull. Nope. Let's go use a different one. That didn't make sense. That was just a bunch of numbers. Okay, Ethereum. I'll use the Coinbase one. 1.5, not bad. I haven't really looked at crypto recently. Let's look big picture first. So the theory behind, you know, if you guys follow crypto at all, Ethereum is supposed to be going through its halvening, was it? It's going through a cycle of sorts, right? Which is supposed to help, you know, pop the price. And a little part of that also has to do with the fact that shorts are more likely to want to cover right now and get out of it because they understand how demand may potentially be increased with the amount of attention that type of thing brings, right? Because it's going to be all in the news and people are going to start talking about it. Let's take a look here. You've got that bounce there. You've got these pretty distinct shelves as well. We're still below that, right? Every time we've bounced there. And you also want to consider these highs here. So we're, you know, out of these channels, we're still in the bottom parts of that. If you wanted to add another one, we're very much right here right now. If you see right here, okay. Previously it's gone up from, but we've also we've struggled so far. So 1, 2, 3, 4, 5. Maybe we'll have our impulse because this is the hint that we may be having an impulse heading up, right? 1, 2, 3, 4, potentially 5. Okay, so I do think Ethereum very possibly could come back to either retest 2000 at the very least, with the demand that it should be able to bring. But right, if a lot of what we talk about with crypto is it hinges on how people treat the monetary system. If people lose faith in the monetary system, there's a lot of there's a big move toward this digital space as well. So, you know, monitor that is what I would say. It also is, just keep in mind, it is in a bit of this little bit of an uptrend. So till that fully breaks, I'd be fairly bullish on this. The only way I would say, if it does break down below this value right here again, that's where we would say, hey, our Elliott Wave is likely invalidated. All right, but you could argue with me here. You got preliminary supply selling climax, and we actually are I think we could show something like that. How quickly that'll play out, we'll see. Okay. All right. Let's do MULN. I also wanted to show NEO because I actually feel NEO's looking a little better as well. It just continued to flag, which was the thing. But MULN, very similar. So you have got all this previous price action. It's obviously died down to this down here. Continues to make lower and lower and lower. But let's go into a little bit closer because things are kind of, you know, narrowing in. If you notice, you got some pops going on in here. So let's actually. There we go. So price going further down. You are starting to see some divergences on this end, right? 1 hour. This as well. You got our pops, right? And then your MACD as well. So there's some indications in terms of, you know, hourly, daily, not so much. I think the daily one that I had seen it broke down a little bit further than that, but it is starting to curl. So MACD starting to curl, RSI possibly heading a little higher. And here's the thing with this one, your stochastic, look how low your stochastic is. And it is showing some divergences versus previous values. So, you know, it has that going for it. In terms of relative to previous prices, it is also very, like, I want to present this approach. Yes, in terms of the company itself, there was this question in Discord, what do you see in the company, Chemo? And I would even, you know, I'm not going to speak for him, but from my perspective, I don't think he cares about what the company does in the long run. This company could go kaput by next year for all we know. But right now, all he is focused upon is we're at price points down below where we've had some significant jumps from. And overall, in terms of the big picture of it, it's on the lower end and lower prices. So these movements of this penny stock are going to be much more drastic relative, like, you know, 66 cents, right? If it goes to $1, that's already a 50% increase, okay? And so I want to point out, though, it's not necessarily a trade you should just get into blindly. He's been very strategic with the way that he's averaged down and made sure not to over leverage himself in a manner. Yes, the amounts that he's trading with are much more than what, you know, you and I would probably be comfortable with, but at the end of the day, he's got his strategy working for him. All right. So, right, if you notice, previous lows down here have always exploded higher from, and you can notice, at least with this on the daily today, we had this nice big green candle came in with this volume that is starting to show. Could this lower price now be where the shorts are really starting to cover? I think that's what his theory ultimately is that, I mean, the only other thing would be breaking down below this back to the 50-cent area, right? So, you know, we'll see. But in terms of positioning, I would not be surprised if we break back to these ranges, you know, at least toward the dollar range, okay? There's a lot of indication of that possibility. Okay, let's swap over into this Webull. Let's talk about Docusign. I kind of want to look at their okay, so Docusign, not going to be as liquid as like SPY and those ones, obviously. Ooh, so look at this. This is a reason why we might be a little bit too late to the party is what I would say. Implied volatility for these is already extremely high. Let's look a little further out. You go down toward 100 down here. If you're willing to buy further out, you can get a little bit lower volatility. But volatility is what's very unfavorable here. You guys see that? What does volatility mean? Well, let's just use this 100, assume this is 100%. This $330 that you buy at, the standard deviation range for this is to go down to 0 or to go up to 660. So yes, gaining 100% is possible with this, but losing all of it is just as possible. And that's something you should not bat an eye about, okay? So these volatilities being that high are not very favorable. And if, look at this, you go into next year's even, or you know, even further out, it's still in the 70s of sorts. So if we wanted to play this situation, probably would have wanted to get in a lot earlier. Now, something to consider though, is you could maybe make, right, if the spread is small enough on these, okay, let's just really quick, like, you know, talk out loud. Here you got this higher interest, right? So they're saying, keep in mind, these are puts that I have in here. Let's go. We're thinking there's going to be calls. Real quick, look at this. So on the put side, which they're saying we want price to go down, right? The aiming for these lower values, okay. So in the money, out the money. Nothing significant. If you're going to play this tomorrow, look at these ones. The 60 strike for September 16th, because obviously you're going to be done after earnings. You would want to get out the morning of. This would be a play that you're going to go pop at least $2 above 60. Now let's look at this if this is going to be worth it. You're going to hold it for theta for a day, so that's going to be 20. Delta, you could get back $1 total, right? It's because it's about $2 move if you go to at least 60, putting this into the money. So that actually wouldn't necessarily be too terrible, okay? But I want to point out, you keep holding it, this IV will start to wreck you in terms of the IV is just going to eat you up, okay? Because if this starts to shrink, then this starts to shrink, all right? Volume's kind of low though, that's the problem. So open interest is good, but volume's low. Yeah, that's pretty much it for that. Let's see. Right. Something like SPY is definitely just a situation. And oh, hold on real quick. That's also why. Let me go back. Docu might have more. I didn't click weeklies. That's why. There we go. Let's see what the weeklies look like. Okay. There's more people wanting to trade the monthlies than this expires the day of their earnings. So keep that in mind. I don't even know if is Docusign going to do it early or late. Let's look at that. Trading view. Earnings. is supposed to be the second, but it actually isn't confirmed. It's a possibility. So this doesn't guarantee, this one doesn't guarantee that it's going to go through earnings, right? So then that usually will mean there's going to be a higher interest for these guys. Oh my goodness, do you see that? Everybody's in this room, right? And the implied volatility is super high for this. Open interest isn't that great though. Do you see that? Do you see the difference? So if you had to choose between, right, you don't want to play this one because this one doesn't go through to earnings, right? This would only be for a very, very super quick pop get in, get out, but that's not worthwhile. That's a high risk, right? You're more likely to get stuck with something you can't get out of. This situation, IV's 150, stay away from that. We're too late to that one. September, this one, 130, I would definitely stay away from that. The ones in terms of, the only thing on this one that I like is this open interest here. But, you know, think about it this way, is like, you know, Docusign, here's the thing. With, it would definitely be more of a gamble in the sense of you're gambling that Docusign is going to give us good earnings and it's going to pop past the 60. Well, in that situation, yeah, if it pops past the 60, let's say if it goes up to, right, 65, right, you just get a $7 pop. Well, that's going to be about $3.50 that you add on top of this. So yeah, that can definitely be a decent, you know, 60, 70% right there. Okay. But you have a bigger probability of danger here simply because if this misses earnings and it goes down, not only are you eating that theta, but this is going to act against you, right? And you also have your implied volatility as people leave the room. This has so many things that will start to shrink it so quickly, okay? What would I say? I would say wait for earnings to report and then let that price action dictate where you might be able to get in on the relief of the stochastic and the RSI instead, okay? And also, I also do believe with the indices right now, there's also this possibility that when we gap down, there's usually a very good rallies back up because we're so quick, so overextended. So what will happen is we'll gap down and then we'll start to rally to deal with the oversold conditions. On the other hand, like last night, what happened was we gapped up and that gap up was the rally for our oversold conditions. And so we continue to dump, okay? So after hours, sometimes what it'll do is it'll either push the indicator further or it'll relieve the indicator enough to give us room too. So that's what after hours, oftentimes you can kind of peek at to see what they expect, but also understand that they can gap it down to revert to close the gap, or they can actually gap it up so that they can have more profits to take to go down, right? Okay. Any questions? Anything else you guys want me to look at? Anybody? No.
Can we get a NEO?
Which one? Oh, NEO.
NEO.
I skipped that. There we go. I had it pulled up here. Let's go into NEO. NEO. I posted this, right? So signs that I think, and again, it is another earnings situation. What I don't love is NEO being an overseas company, therefore being subject to the financial situations going on overseas in China, okay? But in terms of the price action here, okay, you got your buying here. So this is a selling climax where you dumped, okay? You also have your preliminary supply over on the left, simply because you had your first little, you know, short covering or, you know, profit taking range. Okay, so those two now create a trading range that we want to respect. Here's our trading range. Okay. Your first push down is always your first push down to get the paper handers out. Then you have a quick reaction, and that reaction shows you where we're biased toward after this, okay? So we reacted backwards pretty heavily. We had a bunch of buy-ups, okay? Then we test out the second time, and this second time, you'll notice takes longer than the first drop, simply because you got to take more time to shake out the second set of paper handers, right? They're stronger than level 1. There's level 2 right now, okay? Then we rally back up. Then level 3, which you can consider are like diamond handers, they're not necessarily really willing to let go as much. So there's not always the possibility that it's going to make all the way back down to previous levels. They're less willing to, and in this situation, it's showing they're not willing to let go of their supply. They're not putting it back onto the market. And so price isn't necessarily breaking down below into previous values. And that's what these yellow arrows are showing is as we approach the lower end of these, look at how low that, let me clear this a little bit. I'm just going to use this white line down here to kind of bring your eyes down to all the volume, because that's how low a volume there is. When this price was showing that, right, that many people came to the market. Do you see that? Which ultimately shows nobody's willing to let go of their shares anymore. And so the probability now does lean to the upside here, okay? That if we're able to break above these values, we very likely could shoot back up toward this, potentially retest and go up higher. But all we care about is that there's bounce, and then very likely another bounce in this situation, play that quick run up, and that's what we're hoping for. Could it be that earnings will be the catalyst for it? That's very, very possible. You know, in the situation of overseas, you could argue with me and say, you know what, everybody over there is fearful. Maybe we should be greedy about this here, because that could just be the narrative. But the hard part about this one in particular is I don't know what it's like over there. I don't know who's driving these. I can't even make my own observations. At least here on the road, I can count how many Hyundai Ioniqs and how many Mustangs I see in terms of the EV population out here in San Diego. How many of those Teslas I see running around. That's often, you know, that's something that I'll always bring up and talk to you guys about. But in this situation, it's very tough because we don't have eyes on that particular situation. But if I were to just base it upon price action, you know, you also have this, you got left shoulder, you got the head, and then you've got this other shoulder forming. So there is a good likelihood we could make that and break back up, okay? But I know chemo's in the calls for, I think, just September 16th, which is right around here. So this still needs, you know, it's got a limited time frame for it to play out. So keep that in mind. October could be a little bit more safe, etc., depending on what you're looking at in terms of it. But, you know, you've got some solid buy-ups here. And when you think about our big money theory, that means there's a floor here, a floor here, a floor here, and a floor here. Well, worst situation would probably be maybe we would come down toward this part before we bounce, right? But we've already been doing this for quite a while. So chances are this is our bull flag to head up from. That makes sense? Any questions on anything? Any other ones you want me to go over?
Nope, I think I'm good. Thanks.
Oh, PFE. Let's do that real quick. Yeah, let's do PFE. Pfizer, I feel like all I keep seeing is all this bad news about how the whole conspiracy behind Pfizer outputting the stuff on, you know, the vaccines onto the market. There's a lot of stuff about that that's just being released due to all the documentation that they were asked to provide, right? But also, would you say necessarily demand for it has necessarily gone up? The thing here that you want to notice is the structure has broken. We've broken this, you have kind of a triangular pattern from here. That's broken here. That's already broken out. You go and look at this and zoom even more, this is starting to look more and more distributive on this big picture with that breaking down. That did not hold either, which is alarming. Okay. And then let's look at this one here. Okay. It's at make or break, pretty much. Do you see that? This has been since 2020. So if this holds, awesome. I expect a bit of a bounce here, if you think about that. This line should give us a little bit of a reaction. Let's take a look. Yep, we're down low, down low. Let me pull this up here. Where'd my, I don't have the MACD. Oh, that's a different. There we go. MACD, not really anything showing that it's got anything bullish except for it being oversold on a lot of these conditions. So I expect to bounce at this resistance, maybe retesting the bottom end of those previous resistances, and then very likely heading further down to test out this previous here. I could see this headed down toward 40, 41, 41.50-ish. The rough thing about this is the fact that it's a, you know, the stock itself isn't so expensive. So yeah, I mean, the puts might be pretty cheap, etc. Company does decent. I've never had any, you know, profit margins are good. They haven't shown that type of issue. So in terms of like company wise, they should have no problem. But the question will be the demand of their company. It's, you know, overall, it is weaning to an extent, right? The downtrend as well. This is very alarming that you can imagine this downtrend will take a bit of time for us to potentially break, okay? So I see a bounce and very likely headed further to test out. You know, we have a lot of resistance lines below. It's not going to hit 40 quickly. But as of right now, this is a very distinct sign of weakness breaking out of this channel, respecting those. If the buyers were ready to push it back up, they would have stepped in here, if you think, right? So if they let this fall, we're very likely headed down here, right? Yeah, definitely. And okay, so let's really quickly, if you're looking for a quick bounce right in this situation, what is it that you're looking for on these other timeframes? Is that you want to make sure that there's these divergences forming, right? So Pfizer's been going lower. This is the 30-minute. You don't really have maybe a little bit of divergence on these, but nothing drastic, right? So there could be a little bit of a little bounce forming in due time. But also make sure that you take a look at your open interest, the IV. At least this one doesn't have earnings that you're running up to. So, but yeah, look at this. On the 2 hour, look how far down this is. I definitely do see a bounce coming for this, a bounce and then further down. Okay. Oh, real quick too. I just want to look at Elliott Wave for this on the big picture. It's just been pretty much a correction. 1, 2, it's a triangular correction. Yeah, nothing major in terms of this. You don't really, you could argue this might be the first beginning of an impulse down. This could be a 1, 2, and then we could have a big 3 come. So yeah, keep an eye on that. A small bounce, but then potentially further down is what I'm aiming. Cool. I'll try to let you guys know. My basketball schedule will be changing week to week up to a certain point, depending on what gym availability that I have. But I'll still continue to help you guys out with, putting these videos together, uploading them, getting you guys eyes on different charts so that you can add it on to whatever it is you're looking at. You know, I noticed a couple more of you guys have been using the emojis on my channel. It really helps me out as to what I'm trying to explain if people are interested or see things. Let's all work together and try to build that confidence and confluence together in terms of certain charts. And if you do need additional things and additional eyes on stuff, don't hesitate. That's what I'm here to help you guys out with. We do start a new ICA next week. So again, I'll have to adjust the timing from there. But generally what I'll try to do is try to do classes around maybe 7 or 8 on like a Monday or Wednesday if I happen to have those availabilities, so that I can work around the new ICA classes. I think we're doing some East Coast kids, or East Coast students. I always call them kids because of my tutoring company, but East Coast students, and therefore we're moving classes a little bit earlier. So that way I can probably help you guys out with it afterwards. But yeah, good luck with everything tomorrow. We'll continue. We'll stay in touch, and I'll see you guys back in here in due time. I'll try to do one either Friday or this weekend. I'll let you guys know as soon as I figure out what's happening then.
Thanks, Mike.